Hello traders and welcome to today's daily watch list. Let's have a look at the economic calendar. We had the GDP month after month out of the UK, nothing out of the ordinary, nothing that really moved the markets. And there's nothing that we are looking forward on during today's trading session other than Governor Bailey speaking, right? On the news side, we had some news out of the IEA, right? The oil supply from the OPEC set to increase by 800,000 barrels per day in 2021. Also, the oil demand is set to rise 5.4 million barrels per day in 2021 and a further 3.1 million barrels per day in 2022. So it's expected that the demand in crude is going to be increasing a lot, right? Because the demand of petroleum-based product is increasing a lot. And the supply, of course, is going to be increased too. To face that demand, right? Because if the supply doesn't increase, that is going to drive prices so much higher, right? And we are already in a heavy inflation era. So let's have a look at the DXY again, a non-directional for the past couple of trading days. Let's focus on the 4-hour and the hourly chart, right? This is the 4-hour chart on DXY, and again, we have been inside of this range, right? This range right here for the past 1, 2, 3, let's call it 4 weeks. 5 weeks, counting this one. And right now we are seeing some bullishness on the US dollar, right? Again, this is non-directional move, right? Unless we break with last week's highs, I wouldn't be looking for buys on the US dollar, and really unless we break with the lows right here, I wouldn't be looking for sales on the US dollar. Now, the reason being that this range has been very, very choppy, and trading a non-directional range really is non-profitable in the long term, right? So we're going to wait and see what happens. And let's have a look at the hourly chart to see what's going on here. So we've had from the daily lows, this is the 50-minute chart, right? Let's move to the 1-hour chart. Well, from the daily lows, we have seen a lot of buyers jumping in. So, what this could mean is that, we might retest yesterday's highs. Again, you remember yesterday that we had this very, very choppy price action during the CPI release in the United States. Of course, that this level, the 90.25 level, was rejected again. Now, this move is really strong, as I'm seeing it right now. So we might get a little bit of a breakout, but we are still inside of that range, and the top of the range is June 4th. Let's have a look when that was. So last Friday's highs is really the top of the range, and but if we break, if we break with yesterday's highs, right, or even if we break with that 90.30 level, and the price stabilizes above that level, we might be looking for longs in the US dollar during the US session or pre-US session, right? So that's the plan. Metals, let's have a look at gold. Now, gold, it's quite interesting what's going on in gold. Let's have a look at the hourly. Again, non-directional range. Well, this is the 4-hour chart. Let me grab the hourly. Non-directional range for the past 7 trading days. We've had some spike lows, right? This is the one and this is the second one. But right now, the 1888 level, this one right here, which confluences with the weekly pivot, etc. I can show you on the 4-hour chart why this level is so strong. So we're talking about really May 29th highs, May 21st highs, and this is the level that was broken with, and that we saw buyers jump in, right? And again, right now we are retesting that level. I mean, this is not a signal to go long whatsoever. We are just focusing on monitoring what happens with gold prices right here. Well, because I mean, hold on, let me just delete a couple of lines here because I mean, my chart is a little bit too cluttered. So really, what I'm looking for is if we get a clear rejection of this level, we might get an opportunity to buy into this weakness for a rally. But again, that depends on a lot of factors. And well, right now we've had a very bearish day in metals. Let me show you the well, silver has already pulled back from the highs. Maybe gold will follow. Let's have a look at the gold silver ratio, right? Well, the gold-silver ratio shows silver being the strongest one of the metals, right? This is a chart that you don't trade from. This is a chart that you just look at to understand which one of the two metals is the strongest one. When this chart goes down, silver is the strongest one of those metals, and when it goes up, well, it's gold. But again, we have this level that we are currently testing, so we might get a rally in gold pre-market, pre-New York Open. So we are going to be monitoring this this possible scenario. On the hourly, it's still very bearish. If we move to the 15-minute chart, well, 15-minute chart looks a little bit prettier. With this rejection candle, and then we printed a bullish candle, but again, this doesn't mean anything because we printed a new daily low. So this is what I'm looking at on metals. Let's have a look at some major currency pairs. The EURUSD. The EURUSD is getting hammered today. Well, let's have a look at the 4-hour chart. Yesterday I told you that I was looking for buys on the Euro-US dollar, maybe at a break of this high, but I didn't take that buy because of the heavy data dump day, right? And right now we're seeing a lot of weakness on the euro. Again, we are trading inside of a non-directional range. I mean, everything that we have that we are looking at, not every market that we trade, but a lot of the markets that we trade are in non-directional ranges. So we're going to cautiously wait for maybe a breakout during the New York session, or maybe next week we do get some breakouts, maybe to the downside or to the upside, right? But again, this really doesn't mean anything. Why? Because if we look at the hourly, right? If we look at the hourly, I mean, the hourly looks extremely bearish. We're talking about a let's have a look. I mean, it's only a 42 pip move to the downside in the Euro-USD, and we do have this level to the downside, this key level to the downside. And as you can see, I mean, we have been trading for the past 6 days in a non-directional range. Now, maybe we get the opportunity to buy into this weakness, right? At the retest and the rejection of those lows, which we have seen in the past, that buyers have jumped in here. But again, we are monitoring that scenario too. The US dollar CAD, the USD CAD, I mean, we do have that buy on the USD CAD, which we are keeping, right? Why? Because the setup is still valid. We are waiting for the breakout of this range at the bottom of the chart. And like I told you yesterday, the reaction on inflation data out of the US on the US dollar CAD was so mild that it leads me to believe that there is a lot of US dollar CAD sellers. There's a lot of Canadian dollar sellers here at the bottom of the move. Remember that when the Canadian dollar sells off, the US dollar CAD rallies. So because the rejection was so mild yesterday, and we saw the rejection of this level, it leads me to believe that we might get, there might be a lot of CAD sellers at the bottom of the move, right? That could, in fact, make the US dollar CAD break with this range, right? I know that we have that buy stop above those highs, and the reason we do have it all the way up here is because, if you notice, we week after week after week, we have been making lower highs, right? So if we put a buy stops here, right, we're going to have the previous week's highs and the previous week's highs and the previous week's highs as a massive resistance. So whenever and if there is a breakout, we want to be sure of that breakout and run it. The US dollar yen, came down to yesterday's lows and printed today's lows at its exact same level. Now, right now it's rallying, right, a little bit. But the thing about our management or trade management yesterday was that after seeing this rejection right here and then the second rejection, the daily lows were at the bottom of these two candles, right? So really, if price broke, if price broke with those lows, we really didn't want to be on a buy on the US dollar CAD, right? Why? Because it completely invalidated our trade idea, and there is absolutely no way to know that price wasn't going to dip further and hit our stop losses at a full loss. So we managed to just lose 1/3 of the initial risk, which is a good thing, right? So the one that I'm looking at, and very plausible, I'm going to be sending a signal right now, is the US dollar Mexican peso. Yesterday I talked about the US dollar Mexican peso being this is the daily chart, right, being at the bottom here where we saw back in January big buyers jumping in, right? So this is quite the setup. So what I'm looking at really, and the reason that I haven't said anything is why, because like I told you yesterday, we are trading below the previous broken base. So it's really a losing trade to jump in long when we have a very strong short-term bearish structure, and we are below the previous broken lows, right? And of course that sellers are going to be placed here. So what I'm looking at is maybe a possible deep buy if we break with these highs, right? If we break with these highs, what I really would like to see is a break of these highs and then a pullback to that 1975 level in order to go long. I don't know if this is going to happen today, but I'm keeping an eye on this. Now, the GBP yen right now, we had this. We still have it. It's still valid, that buy stop. I'm sorry, on the pound yen. Well, the reason that I took, that I was looking for that, this is the hourly chart, right? I'm going just to know this 50-minute chart. Let's put on the hourly. I don't know why we have the 50-minute there. So, after yesterday's massive bullish day, right? I'm looking to get in on a continuation of this move. Why? Because if you look at my chart, right, after making this high, right, we came up to an ABC pullback that not only rejected though this previous highs, which were the level that was broken with massively, and that we took that trade for, obviously, but also the long-term structure, right? The long-term bullish structure. If you noticed, yesterday we came exactly to that structure. I mean, you can see it here. It is a very structured market, and the 161.8 of the AB move, which means that we completed that ABC move. And of course, that not every ABC move is going to be a winner, right? That's why we have the buy stops above those highs, because we need those highs to break the weekly pivot, to break the previous base, to break, etc. So we're keeping on that. Let's finish up by looking at a Bitcoin. Yesterday I was talking about that breakout in Bitcoin that I took, right? What's funny about this is that if you look at the 4-hour chart, right, it's a clear breakout of this structure. Okay, now this might have been seen as a fake out by most traders, but and of course that very weak longs got taken out on this pullback. And I was looking at that, and I have been monitoring this trade since yesterday. And the reason that I'm still on it is because of this, right? To me, the make it or break it level is really the 35,700 level, these lows right here. And why? Because this is my previous key level that was broken with here. So when we broke with this key level, right, in my eyes, we are short-term bullish, right? So my stops are all the way below here, and I'm still holding that level, right, on this breakup. I don't remember where my actual entry is, but I think it's somewhere here. I don't know. But the thing about this is that if this is truly the breakout that I am looking for, we could see Bitcoin really at least rally to this previous very heavy key level around the 42,400 level, right? Now this is my first target in this trade. Now if price breaks with these lows, I'm out at a loss, which is fine, but it's really looking bullish in my eyes, more so because of the news that I have sent you on Bitcoin to the VIP group. Now let's have a look really quick at some US equities. And yesterday, right, we had that big bullish day on US equities. The Nasdaq rallied from low to high about 2%, etc. Right now, the Nasdaq, there's absolutely no setup. The Dow is another story, right? So let me just delete this red line. I don't know why that line is there, but if we look at the 4-hour chart, mates, if we look at the 4-hour chart, right, that 34, let's call it 34.46 level is being, price is really respecting it. Buyers are really holding up here. There is, to me, there is no setup to go long, but if you were looking for a speculative entry, right, this would be the place to do so. Why? Because just look at the risk to reward ratio on this possible trade, right? Of course, your stops would have to be below the daily lows. So, and the first target, yesterday's highs, last week's highs. This is a 4-hour chart. So we're looking at about a 1 to 2.13 risk to reward ratio, and If we look at even further, 1 to 3.6 to reckon its all-time highs, right? So yeah, I mean that's the setup that I'm looking on the Dow, and let's finish up. But well, the S&P 500 again. Really nothing to do here. I mean, I wouldn't trade the breakout of all-time highs right here. The Dow, however, is the one that's really speaking to me. So there you go. Trade safe. Again, manage your risk correctly, please. And if you have any questions, you know what to do. And I'll see you guys on Monday.